This week has been a story of failed breakouts. I mean, everywhere you look, it's like the stocks that were perfectly set up just completely flopped. And maybe that's because positioning's already fully invested based on the name numbers, or maybe it's because there's no fundamental reason for Marvel to quadruple just because Jensen says it's a $1 trillion company. Regardless, it is making for some interesting two-sided trade out there that we haven't seen in quite a while. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 3 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale, and the first thing we always try to figure out is what's going on here from a trend perspective. Well, of course, on the Monday and Tuesday session, we just set a brand new all-time high, which means this is the highest high in the trend count. And therefore, after we've set a highest high, we can of course pull back and afford to set a higher low, and that would maintain the trend in the upward direction. We've started the pullback as of today's session, finally breaking a prior daily bar low. And the ideal place that I'd love to see the market pull back towards is this 748.75. We could use previous resistance as newfound support, and ideally that would be happening over the daily 20 SMA, which is this orange moving average on the screen. And just as a reminder, pullbacks are healthy in an uptrend. If you think about this period of time right here, yeah, I mean, it's great when the market's just up and away and every day is a bullish day. But this pullback was technically what allowed for the market to continue in the upward direction and break this and set a new higher high, right? The market needs to pull back. It needs to offer some give and take. And if we could pull back, that would be healthy for this market rally. We could see if we could pick up new buyers against that prior high and then go back to the equal high, if not breakout, and try to make some kind of a higher high towards the measured move, which, as we talked about on Saturday, is closer to 767. That's the doubling of this as a 2-week balance range right here. So I like what I'm seeing on the SPY daily time frame. We haven't seen a red bar in quite some time. Is it reasonable that we could continue the pullback towards that level? Absolutely. How do we do it? It's based on the hourly trend reversal, right? We want to see an hourly downtrend to achieve a firm daily higher low. We saw an hourly downtrend here. The trend reversed out of this head and shoulders, hourly higher low. Now we're back in an uptrend. Here we start to see highs. Is this a lower high? I think it's a little early. I think you could certainly start to classify this as an hourly head and shoulders. I think we could certainly start to think about a breakdown here being the bare minimum underneath this equal low set. That would be the neckline, if you will, of the pattern. Underneath 754, at least gets the thin structure retracement here into the 2-day balance range highs from Tuesday and Wednesday of last week, the shortened holiday week. That's 751.75. And then, just a slight overshoot of that, and we're kind of home at that previous left side peak. So I think it's very reasonable to expect that the market could continue to pull back here and drift into this, sustained hourly downtrend for a day or two, then allowing for, once again, a firm reversal here on the hourly chart. Something that looks like this kicks you into a daily higher low. So this HL reference is the daily time scale. The hourly trend flips back to up here with an hourly higher low. Then you're just retargeting the equal highs. It's kind of a rinse and repeat of this exact pullback sequence from over here. That's the picture perfect world. Now, if you're more of a bear and you're like, no, this market's going to crash and burn and it's going to go to zero, well, the first thing I'd point to is probably not going to happen as we see sector rotation the way it is. If we do get an Armageddon situation, if we get nasty red-bodied bars that just blow straight through all this support, I would say that the bears can have something to lean on for a stronger daily reversal. We want a white crayon, not a box. Here we go. If we then produce a lower high here. Now, is this a base case? Probably not. I would say that this is back pocket defense if we are looking for, or if we start to see, I should rather say, if we start to see this market, like I said, maybe solid red-bodied bar that just completely wipes out the support point. We close like this on Friday or something, maybe it's even a hammer here on Friday that overshoots the 20. I would be slightly concerned if, the market comes in here, lower highs, and now, as we talked about on Saturday, we start to see that head and shoulders, the failed weekly breakout through the 2-week balance range high. Once again, this is a back pocket situation. This is something that we can prepare and adapt as and if we see this unfolding. But the base case, just to be very clear, something that looks like this. Daily higher low using previous resistance, newfound support over a rising 20 SMA over the lower bound of the weekly expected move, which is here at 746.35. Hourly trend flips back to up, some kind of an hourly Brigade bolt that looks like that. Back over 751.75, the 2-day balance range highs, and we're retargeting the all-time high, the equal high. Fairly straightforward? I think so. Let's drop it on down to the hourly chart again and throw on the anchored VWAPs. Let's come in here with this set right here. The main illustration would just be that this level is catching confluence off of the major low, right? If I just hover my cursor here, you can see that VWAP brighten up just a little bit as I hover on and off of it. That's confluence at that 748.75. And even if we overshoot that by just a little bit, so once again, say the hourly trend flips to down, something that looks like this, and it is going to be a inverted head and shoulders or something like that on the hourly in this neighborhood, you could overshoot by a hair. You'll catch this one for support as the week wears on. The 20 SMA will be higher tomorrow and probably higher on Friday, right? You'll be in this neighborhood. So as long as the daily higher low is in this neighborhood, I'm feeling pretty comfortable about the trend trying to continue in the upward direction. That's what we've got there. We can hit this with a Fibonacci as well, coming from this low up to the new highs that were set on Monday and Tuesday. And who would have guessed the Fib 38.2 is smack on confluence with that 748.75. Let's jump on over to the internals for the S&P side. If you're not familiar with this dashboard, check out the video tutorial in the top right hand corner. Two-sided trade, it's here. Oh my goodness, look, volume outflows finally hitting the tape. Reason to believe that the market may continue lower? Sure. If we look at the AD line, it's finally in not quite trend lower zone, but it's sustained red rather than just kind of like bobbing around the zero line. And look at this cumulative build. Big cumulative build to the downside. The bears definitely flexing the muscle at the exchange level. We know that breadth has been fairly narrow with semiconductors leading the charge, but I mean, it's not enough to derail the structural trend of the daily timescale. Let's be very congruent and fluent and thorough in the investigation of the ES. Here we go with the market profile. If you're not familiar with the market profile, check out the video tutorial in the top right hand corner. What do we see? Finally, once, in a blue moon, it's finally happening. You've got your value area on Tuesday. It was toppled. You could see value area is lower on today's session. Point of control is lower. You have an A period string of single prints up here, which means this is somewhat of a B-shaped profile, liquidation break off the open, meaning that longs who were positioned up here with poor location closing out are likely responsible for this breakdown. The B-shaped profile is not necessarily indicative of new money sellers, so I just don't want anybody to be confused. I'm looking for a pullback, but I don't think new money sellers are getting active in this market. I think we have a little bit of exhaustion up here at the highs. Longs with poor location didn't get the inside bar breakout into the Wednesday session, because keep in mind, we didn't really do much analysis or look back of what happened on Monday, Tuesday. Monday breaks to a new high. Tuesday is just a resting bar inside. You would think if the 3-bar play is going to be bullish for new money longs who participated in the afternoon on Tuesday, you want to see this, right? And it didn't happen. So the fact that we did break underneath that Tuesday low, that's your liquidation break. It's not new money sellers. It's longs who got involved on Tuesday said, oh my goodness, this isn't what I was looking for. They close out and they'll reevaluate. If we could pick up new money buyers with stronger confidence down here, that would make much more sense for a daily firm higher low. So that's what I'm seeing in the S&P 500. Let's reset this and quickly tour through the NASDAQ. I know we're moving at the speed of light in tonight's analysis. People to see, places to be tonight in particular. So I appreciate your willingness to listen to my speedy ramblings today. We've got QQQ ripping to a new brand new all-time high, a new brand new all-time high. How about that? Moving so fast, we're going to double up on words. Higher lows continue, though. That is what is different here on the Qs, right? You did not break a previous day low. You've got yourself a hammer candle, and we know that the thing responsible for this is the semiconductor sector, the tech sector here, remaining bid even as we're up here near the highs. Now, we did gap up to a new high and failed. We kind of came back down into range. If we go to the hourly chart, you could see that here. We failed the gap up, pulled back into range. We did not make a new low. The S&P did make a new low. The NASDAQ did not. Then we just kind of closed sideways. Now, NVIDIA, your top dog semiconductor, which is no longer top dog, was down 3.14%, a nice pie over there. However, look at an AMD, up 1.64%. Marvel obviously gapped up. You have Broadcom that gapped up. Again, also closing down a nice pie, 3.14%. But some of your memory names performed well, and I'm specifically talking about a SanDisk of the world. I mean, just look at this thing ripping out to new highs this afternoon. So that's going to keep your Qs, your SMH somewhat buoyant and elevated here, and that's just the reason why, if you go back and compare to the S&P 500, you're lower here making a bar-to-bar low versus the QQQ not really getting the job done there. We've got all these incremental hourly pivot points in here. It's a little bit noisy, I'm not going to lie. I don't necessarily think that you want to just be mortgaging the house on every single one of these levels, but if we're going to pull back, you probably want to see a flush at least to the high of Friday from last week, the hourly inflection, something that does this, right? Set a lower high in here. Do we start to consider this hourly head and shoulders? Maybe. Is there a neckline to break, right? You could see that. I'd say the biggest level to maybe pay attention to and parse out of that is just going to be this one. So we'll do it together. Let's just make that a little bit firmer. If we could stay over 731.15, that's like the most bullish outcome here, right? That would naturally keep us over the 2-day range high for the daily higher low. If you pull back underneath that, it's got to be gap close. It's got to be lower bound to the weekly expected move. It's got to be the daily 20 SMA, and it's got to be, if we throw on our anchored VWAP set here, it's got to be the confluence right in this neighborhood here. Is it going to be, I don't know the answer to this one, is it going to be the Fib 38.2? Not so quick. You've got your 50% Fib retracement in that neighborhood though, and slowly, depending on what happens exactly tomorrow, maybe the Fib 38.2 is in the neighborhood enough of that 731.15 where the pullback will be okay to sort of like, maybe it's a quick look below and fail or something at the level, and then we bounce in that area. Nonetheless, I think the thesis is mostly the same over here in the NASDAQ. I would like to see a pullback. I want to see the market do something like this to be able to fuel the next leg. The more, upside we get without sideways consolidation, without pullbacks, the more the market's running on fumes, the easier it will be to have liquidation breaks, which is, I guess, the last thing I'll mention here on the QQQ hourly. The fact that you're continuously getting these incremental higher highs, just put yourself in the shoes of a long trader. If you check the box and bought this market long on the highs from Friday, okay, you got a little bit of a payday there on Monday. Tuesday, you make an incremental high. Okay, not bad. Today's Wednesday session, you gap up and then fail. You're kind of just still at, incrementally higher. Now, put yourself in the shoes of somebody who bought the Monday afternoon, bought the Tuesday afternoon. Those people are the ones who are like, oh, hang on a second, this isn't really accelerating the way I thought it was. And lo and behold, when and if they decide to close out, you get something similar here to what we experienced in the S&P 500, that B-shaped market profile liquidation break. So in the NASDAQ, I do think you're exhausting buyers up here. Just they're getting less and less and less sort of progress. And for that reason, it wouldn't be all that unreasonable where if you break a prior day's low, you're probably talking about lower. You're triggering some stops and you're probably looking at, once again, a pullback closer to about the 731.15. So that's the look on the NASDAQ. Let's go ahead and take a look at the market internals for the NASDAQ side of things. You can see volume outflows here in trend lower zone on the AD line and that 45-degree build to the downside on the cumulative. It is bearish at the exchange level. We know just a couple of buoyant names are keeping this market elevated. That's that. Let's go on over to the market profile for the NASDAQ. And you can see here, A period, small string of single prints. Is it a B-shaped profile? Not in the classic sense. Value area is more so just overlapping with the previous day's value. You can see it's kind of unchanged in here. So S&P 500, absolutely more of a B-shaped liquidation. On the NASDAQ, kind of just balanced to slightly higher, lack of acceptance over and into blue sky territories. Seems like the market needs to take a little bit of a chill pill in here. Let's go on over to the platform and finish up the majors with our, let's just prep that in the background. But of course, the Rusty Russell. Let's jump into the IWM. And this, of course, is our small caps ETF. You can see here we've got ourselves a balance range. You're still in a bull flag. And as we've been talking about in the morning sessions, here was your first picture perfect bull flag. Instead of supporting, and just like breaking out in the most clean sense, you actually had to shake out the low end of the flag range before then heading higher. You needed to close this gap all the way, and then the market made the move higher. This was less of a shakeout and more of just a rate scare that did successfully break down through the chart. But the point is that it went lower before it went higher out of this consolidation. So maybe you could see where I'm going with this. Do we need some sort of symmetry here where here's your flag, everybody thinks it's higher just in the simple sense, there's your bull flag, it's got to break out and go higher, when in reality, maybe you need to shake out to the daily 20, reclaim the flag low, and then you're up and out for some kind of a continuation. We've seen it here, we've seen it here. Do we need to see it again over here? That would be the watch on small caps. I'm not overly bearish yet. We do just have a gap fill reversal underneath us based on the Monday low. We did not take that out on today's session. Now, does this consolidation look good? Not really. I would expect that, you probably break that level, at least sweep it, and then try to reclaim it. So 286.75 is going to be the key watch. If you do just rip back above this tomorrow morning, we'll see what the overnight session looks like. But over 288.35 is just a range low support. I would target top end of the range. Balance rules in effect. You got range low, supportive down here. You're close enough to the low end of the range where there's enough risk reward meat on the bone to try to target the top end, right? So that is keeping it simple over on the IWM. Let's quickly hit this with some fibs. From the lows up to the highs, 38.2 would be that shake towards the daily 20. So if you do sweep it, you're kind of still in bull flag territory. Something that looks like that would be A-okay. If we come in here with our anchored VWAPs, let's see what we got going on here. The big stack underneath us is there, and it would be great if we could reclaim this. Tomorrow, these will come down a little bit further. Right, a reclaim of that 288.35 will recapture the gap up anchored VWAP, as well as this is not as relevant. It's not the all-time high anchored VWAP. I'm sure if we back this off to what day is that? That's going to be the 528 bar. Let's just quickly go 0528 on the backside here, 0528, and let's hit OK. And yes, that's pretty much going to be confluence as these move slightly lower to the end of the week, as long as price is below. And something like that would be a nice reclaim long back to the top of the range. Okay, IWM done there at the hourly time scale level. Let's jump on into our market internals. Big volume outflows. We know that. We saw it. Here it is in the AD line, weaker over there. And the cumulative build, lo and behold, it looks like the other components of the index ETFs as well, S&P, NASDAQ, all bearish at the exchange level. So, is it time for some two-sided trade? Does the market need a breather? It certainly seems like it after today's session. Just a handful of names kind of keeping things from completely falling apart. But once again, is it going to be enough to save the day? That's the million-dollar question into the end of this week. I would like to see the pullback on controlled sort of selling, if you will. Let's go on over to this RTY futures chart. From the market profile point of view, you could see the same thing as the S&P 500 more so, but just remember that this is still in a balance range. Right, if I do this, you could just kind of see how this is the entire balance range. Value built out lower today. It's certainly underneath the Tuesday session, but is it meaningfully underneath the balance range overall net on the daily? Not really. So still waiting patiently before I would really change my tone to being an aggressive bear here. I think the sweep, reclaim, and then long back to the highs is more of the thing that I'm watching for. If that doesn't happen, the base case threat disappears when you kind of take out that equal low. Say this is a lower high, you take out this equal low, right, and instead make a lower low. That's where the base case for the bulls goes out the window, and we have to be a little bit more cognizant of the potential for a larger sort of pause, if you will, across the market. Let's just reset this to some dailies. Let's take a look at our sectors. Who was leading, who was losing, where's the weight? SMH, not technically one of the 11 sectors, but certainly heavy and influential for the XLK. Nice and green there, up 7%. A lot of gaps on that chart. XLE, energy, up 2.95%, actually outperforming the weekly S&P 500 performance. That is technically a defensive / inflationary pulse. Don't like that. XLK still looks good. That's heavyweight risk on. XLB is lightweight. It's not necessarily risk off though. XLI is medium weight risk on, I would say. IGV, bottom of the barrel. So you're not really seeing the defensive musical chairs where it's, sell software, buy semis, because as we'll see in just a moment, semis are kind of just, I know they're up, but gaps there make that tough intraday. The Mag 7 has really been ruthless to the downside. That's where in the intro I was mentioning a lot of failed breakouts. Yeah, Mag 7 is the place of failed breakouts. XLC is a part of that. XLY is a part of that. Think Tesla, think Amazon. XLF has been a pretty big headwind here for the market. So it's not all rainbows and butterflies. We are getting enough rotation. Today was the big down... big air quotes. Today was the down day in the S&P 500, but as I just filter by performance from daily perspectives, what do you see here, right? There are some green flecks on the watch list performance, mainly out to those defensives. Healthcare is defensive, energy, a little bit more inflationary, staples defensive over here, right? So it's not like this was a Armageddon sell. The big expectation breaker I was outlining earlier in the episode here, when the market does something that looks like this, your large red bodied bars that give you the break of that key support, let's just maybe draw some rectangles in, our large red bodied bars that do this, that happens when this entire watch list is red. Right. And you are seeing some degree of rotation through the sectors on a session like today. So let's look at them. Does the XLV look like it's saving the day? No. Did it bounce today? Sure. But is it saving the market? Not really. You'd need to be telling me that we're doing this if the XLV is going to pull us up, in the S&P 500. Energy, I think, is just too volatile with all the headlines over in Iran and the tentative deal that continues to be it's on, it's off, it's on, it's off. We've heard this story a million times. I don't trust any of the energy companies or crude oil as far as I could throw it. XLB, and that's, I guess, pretty heavy. A barrel of crude oil at 55 gallons? No thanks. XLB, not much to write home about over here. It's not hurting the market, but it's such a lightweight sector. It's not really doing anything that's going to be helpful. XLP, we joke around all the time in the group. If it's not something that's being bought to put in a data center, if a human has to buy it for consumption, good luck. It's not worth trading. It's probably going lower, and XLP doesn't look good here. So from a chart that looks like, okay, maybe we're going to hang out over the 50 SMA. Maybe we're in a grinding uptrend. This will keep the defensives kind of going for the market. This has been a pretty deconstructive look, if you will, for potentially lower. And it kind of gets worse as we go through the different sectors, right? Here's real estate. I don't think there's much to write home about on this. It's a lightweight sector. It doesn't really move the needle for the market. Tried to bounce off the lows in here. Kind of neutral there. Industrials, failed breakout. Hey, here comes the title of today's episode, right? Failed breakout on industrials. Go look at a Caterpillar, right? An XLC, or sorry, a CAT rather. Look at a Caterpillar here up against these prior left side highs. Go look at something like a CMI, Cummins, look at it failing, at the high of day. I'll give it some credit over the 20 SMA, but that's a pretty weak close. You had no cushion if you're long that thing there. Let's go to JCI, Johnson Controls, trying to break out, again, wicking near the breakout level. Let's go to Honeywell, which just got absolutely steamrolled on today's session. No breakout on that. And how about a GE for industrials as well? Not really a great look, failing the overhead supply on GE. Let's go from where were we? XLI to XLY. Speaking of failed breakouts, and of course, this is going to be more of the heavyweight core listed companies, but XLY, horrible, right? From a looking like a decent little attempt up here, saying, okay, let's look for the higher low. Monday, not really great. Midpoint of the range. Let's see if we can get a turnaround story midweek. Nope, bottom of the range. Now testing through the bottom end of the range, testing the 50. Just not a constructive look at all on the XLY. Really tough here. Go on over to your Teslas of the world and take a look at the failure through the hammer high on today's session, from what looked like a decent start to the morning to an unchanged close. Just ugly stuff on Tesla. And of course, Amazon, your other heavyweight component in the XLY, absolutely brutal through the neckline of this as a double top, from what looked like, hey, we're starting to break this inverted head and shoulders neckline, to completely failing over the span of the last 3 trading days. Completely ugly, completely brutal. Tough look for the XLY. And as we know, this is a heavier weight risk on style component. IGV. It looks brutal because, like, oh my goodness, look at this. We're lower, but you got to just remember here in the IGV that we made a pretty impressive move, too far, too fast, over those 3 trading sessions on the gap up, especially gap and go on Monday. So to pull back on the IGV, I think we're okay. I'd like to see a look below and fail the 200. Can we hammer out and find some kind of a higher low in here? That would be constructive for IGV names. We shall see. When I think of IGV, you got to focus on the strength there. CRM is not it. Speaking of failed breakouts, there you go. CRM, no good. Go on over to a FIG, right? Complete failure over this left high. I think you could get something off the daily 20 maybe. Let's go to a service now. Still just rejecting underneath the daily 200 SMA, excuse me. Getting all choked up looking at these ugly charts. ADBE for Adobe, another one, failed breakout over here. I think one of the better ones was Snow, right? And even this is pulling back aggressively. So Oracle, ORCL on today's session, so much for the bullish 3-bar play over 250. I don't think Oracle's broken by any stretch of the imagination, but those things come to mind for our IGV. Let's go on over to the XLK. I think this is fine. You got a gentle pullback here. It looks obviously identical to the QQQ, barring the fact that we did technically make the bar to bar lower low. I think you could get some kind of breakout over this 198.60s. That would be fine. My preference would be for a flag. Let it pull back, let it come in, let it close this gap. As long as we're over 187.50, 186.50, this previous little multi-day range high, I think you're dealing with a daily high or low. Ideally constructive for upside, and then going higher from there. XLC, another expectation breaker. This one, at least we were well prepared for. I mean, we were shouting from the rooftops about this in the newsletter over the weekend, in the weekend video, in the morning preps, and all over the place. This XLC 115 threat, major breakdown. Again, look no further than your Googles of the world. Thanks for the $80 billion offer in Google after hours on Tuesday. Ugly. Look no further than a Netflix, which has just been absolutely destroyed over here. Then you could take a look, of course, at Meta, which they did dirty on the Monday session. I mean, just horrible. Speaking of failed breakouts, here you go. Look at that daily hammer on Friday. Oh, we're all ready to go over the hammer high on Monday. Just shattered expectations with that big sell. And nice rebound today, but generally speaking, once again, expectations have been broken here. That XLC is meaningfully lower regardless of the Meta bounce back. So I think you could go gap fill reversal. You're probably too far, too fast to the downside, looking for a look below and fail, some kind of a counter trend. But boy, oh boy, a lower high here just keeps the pressure on, and you're not really out of the woods on your comms. Here's the Mag 7. We've kind of looked at a number of these names already through the sectors and kind of dissecting that. Here's your double top, very similar to Amazon. Here's your neckline. Is it just a matter of time before this gets wiped out? Maybe. What I find odd about the Mag 7 ETF is this big volume bar here. Not entirely sure what to make of that. I don't know if we're just going to write it off, but I did find that a little bit odd on today's session. So keeping an open mind for the neckline. The previous all-time high is 69, but honestly, the hourly level that you'd want to start trading against in here is going to be around that 68.20. So what we probably need to do, and thanks for bearing with me as we do a little bit of homework on a session where I got to be a little bit speedy here. Let's do this. That's probably the way I would treat this chart, right? Your neckline is just going to be the obvious break. That's underneath today's low, underneath this low from back here on what would have been the 19th of May. So double top in force. If it cracks, you really want to see the left side peak start acting as support around the 67s. If it's just a quick, hey, sorry guys, just had to break it real quick and then send it back higher, great, fine. no problem. But if we stay underneath that neckline for a long time, build out a bear flag here, expectations would be for lower, which gets fairly dangerous for the market. I don't want to be overly bearish. I want to be very clear about that. I don't want to be overly bearish here, but this is not a good look, double topping and getting heavy into the neckline with a number of the components just looking heavy on their daily closes. Here's the XLU. This is technically a defensive sector, so defensive sector can't even act well on a down day in the market. I mean, that's just gap fill reversal rejecting the moving average stack. It's kind of ugly. It's going over the XLF. Pretty interesting look over here. If there's going to be a saving grace, maybe it's the XLF. I would have thought on a breakdown from this value and this like sideways consolidation in here, losing the daily 50, I would have thought a little bit heavier today. You did end up wicking. I'm not going to argue. Obviously it's a terrible close there. It's underneath previous day's low, but I would have thought a little heavier. And it just wasn't the case. You can see your JPM technically up over here, but if you're a MasterCard, just forget about it. Heavy on MasterCard, Visa, ugly over here on the payment processors. I think the big banks are trying to hang in there, right? You've got your MS and your GS probably as the biggest winners over there. Your Bank of America sideways. And then of course the problem childs were the WFCs of the world, which looks like it's trying to put a little recovery effort underway over here. What about a Citibank hanging in there? Okay. And then a BRK.B, I think we got to do. Or is it /B? Yeah, I think it's /. There we go. Berkshire, just not the best look over here on that one. So JPM we'll get to on the core list. There it is, hanging out on the lows as well. XLF, maybe a savior. We shall see. It's no longer the second heaviest weight sector, but it is technically the third. Just a reminder, you could always check them over here on the Analyze tab. There you have it. Comm services tied neck and neck with financials, 9.9 versus 9.8. All right, let's go back on over here. Let's go on over the SMH. Chart looks great. Nice break, right? There's your sort of move higher, very gappy, gap and go, and then pulling back today. Hard to be bearish with, this looks like MU basically. If you look at your MU daily chart, looks exactly like MU. So, it's hard to be bearish the market if semiconductors are still hanging out at highs. I just think if you lose any sort of traction here in the semis, if they do start to pull back more meaningfully, if you do close red bars on the semis, you're probably talking about the market coming in just because, they kind of got a little rotation going today, but how much longer is that going to last for? We just kind of looked and saw, those sector charts don't look stellar. Let's do a very quick tour through our supporting evidence here, and then we'll get into our main watches. XLK, if you're not familiar with ratios, by the way, check the video tutorial on the top right-hand corner. Ratio charts here still look narrow. This looks great. This looks horrible. This looks horrible. This looks horrible. Nothing we didn't cover in the weekend. We still don't have risk off, so I'll go check mark, check mark, check mark. Still all set in those three. Let's go on over to the A set. Still looks okay. I think Kathy's back on the sort of hot seat, if you will. The broader interpretation, Russell 1000 growth value, not the best. You don't really want to see an equal low here. You want to see that extend the trend in the upward direction. I wouldn't say huge red flag yet, but we're watching it closely. So still risk on from that cohort. Still looks risk on here. Gold ratio not sending any red flags. TLT ratio is just too strong. It could go sideways and pull back. That's fine. Bitcoin continues to be a problem. Michael Saylor, selling off 32 Bitcoin. Oh no, 32 Bitcoin being sold. Just total. I think Saylor's got to capitulate before this thing finds a bottom. It's too ugly. It's got no traction. It can't participate in this entire rally. So something bad, some like real bad capitulation washout's got to go on over here in Bitcoin. Saylor's got to get rinsed before we can maybe come out of that one. And Tom Lee, not too far off. I mean, he at least was touting the S&P 500 strength for a while. I think he gets his flowers on that. But the Ethereum call, just pretty brutal and unwilling to change his mind from what it seems. HG copper futures need a higher low in here. Generally, this dashboard's probably half bullish, half kind of like what's going on. So no real, not enough of a divergent information data set to call off the bull case. Dollar, if this breaks out, that'll be a headwind. I think we could continue to get a pullback in the market. Rates, market really cares over 4.5%, so you just got to watch your 45 here on the TNX. If we break out of this little range, I mean, not that I would apply direct technicals here, but an equal high test, we saw what happened last time. The rates breaking out called for the S&P 500 pulling back here, right? So we'll see if that ends up being the case. 4.5% is the straw that breaks the camel's back, to put it that way. Let's jump on over. Inverted ZT is not going to tell us anything we don't know. Let's jump on into our fundamental look. Here is, where's the Fed watch tool? There it is. Still looking at rate hikes. I don't believe it, but looking at rate hikes for potentially the 27 January month, so the first month of January. What a terrible way to say that. Thanks for bearing with me. I don't buy it. I think that we're probably just going to be a little bit more so sideways. Here's the economic data that's been released this week. The manufacturing PMI, kind of a nothing burger. Jolts, kind of a nothing burger there. I would say Jolts came in really strong, which technically means what? Good news is bad news, because it means the Fed doesn't have to come and save the day to support the labor market there. The market's going to interpret that as rates will stay higher for longer. ADP non-farm beats the expectations as well. Same idea there. Strong number means that the Fed doesn't have to save the day. The only thing to read into here is the ISM services PMI. If I bring up that, you could see that our prices paid are increasing faster. You could see our May index coming in at 71.3 versus 70.7. These are like red hot reads, by the way. Typically, you want to see this close to like 51, 52, something like that. But these prices paid numbers are just kind of insane. So increasing faster means inflation, and then your employment situation over here is contracting faster. So a little bit of contradicting action versus the ADP non-farm payroll, as well as the Jolts number that we saw prior, but this is specific to services. Anyways, we are in a service-based economy, which is why, in my view, this is always a little bit more important than the manufacturing numbers. The Beige Book was also released today. The Beige Book, for all you Fed nerds, I myself am one of them, gives us a little insight in prices paid. And of course, districts noted that energy-related costs tied to the Middle East conflict are the primary driver of inflationary pressures, with spillovers to shipping, packaging, groceries, and fertilizer, right? So I don't think that's anything shocking, but I do just think that it's worth pointing out, and I'll continue to stand by this thesis. A rate hike from Kevin Warsh, which would be wildly unpopular based on his nomination, does nothing, absolutely zero, zilch, nada, to pressure the Strait of Hormuz, right? I'll continue to just say that thesis every time we're looking at these charts. Anyways, into the end of the week, we do have tomorrow morning Challenger Gray Christmas. Don't believe me? Open it up. There it is. Mr. Christmas over there. We'll see what they have for our labor report, jobless claims, and then the full Monty report comes out on Friday. We'll have coffee and donuts up here in the office on me if you'd like to join us. Earnings whispers after the close today. Broadcom, CrowdStrike, both I think were slightly lower, if I'm not mistaken. And then Ciena over here tomorrow morning before the open. Speaking about failed breakouts, my God, just horrible on LITE today. If we go on over to the CrowdStrike performance here, looks like they beat on the EPS and revenue numbers. I'm not sure what their guide was. And then over here on Broadcom, same thing. Beat on revenue and earnings. Not sure what the guide is, but we can get into that tomorrow morning once I've got a little bit more time to parse out the reports. Where do we want to go from here? We want to stay over on the supporting evidence. We'll get into those earnings charts in just a second, but we want to move on over to the bond relationships. Inflation impulse is non-existent, or at least, the bonds are saying, we'll get rid of this shortly. And Bessent has certainly said that in his testimony today. Let's jump on over to the credit spreads. Nothing to really write home about. I would keep an eye on this one down here. It's starting to curl higher, but we've got room for a lower high. Let's make sure it sticks a lower high, or at least goes sideways. HYG, subtle bearish divergence again. You got your payout of the dividend rocking the move lower there. We'll see ultimately if this comes home to roost. And even if it does, I want to see a pullback in the S&P 500 to the previous left side peak. Bring it on. I'm not overly concerned about that HYG. Let's go on over to total breadth. Let's go full screen pain by pain. A little bit of breadth contraction today. I don't think this is shocking considering what we've covered in the sectors so far. RSP, you might be like, geez, I would expect the RSP to make a lower low. It didn't. It still held on to that bar-to-bar equal low. If RSP pulls back, I think it's narrative for the S&P 500 to pull back, the weighted, right? If you look at your QQQE out to the highs. So I think through the supporting evidence here, and let's not just stop on breadth, let's finish it off with volatility. You can see your VIX melting over here, lower with that upper wick. Your VVIX is just hanging out sideways, right? It's elevated but sideways, telling us that people are maybe starting to put some hedges on. Then over here, you're like, hang on a second, we're in really strong contango. Complacency effect is in full effect. The one-day VIX coming up off the floor just a little bit ahead of the labor report. The bottom line through the supporting evidence is that I would love to see a pullback that offers the daily higher low for the S&P 500, but I don't see enough compelling evidence yet. And, obviously you have to continue to monitor that supporting evidence as the pullback takes place, but there's not enough compelling evidence yet based on one red day here that, oh my God, the bull market rally's over and we're just going to go to zero. I think we can pull back. I think in here is the next big test for the market. Can we use previous resistance as newfound support? Can we overshoot it by maybe just a little hair, respect the daily 20, then start to move up and out in the upward direction? Let's get into the core list of companies. Let's rip through this. Let's get the job done. You're going to see a lot of failed breakouts here. NVIDIA, what's up? I mean, why, day two continuation of the morning session, beautiful day trade on Tuesday morning, but anything more than a day trade and you got absolutely punished here looking for anything out of that Monday rally. So Horrible look. Is this now just a daily lower high, and are we targeting the equal low? Probably. You're probably looking at lower highs in here under 218.35, target the equal lows, then a breakdown there sends you to your daily 50. If you chop back above, range compression needs more of an indication. This is a fake wick, ignore that from Thinkorswim, but rally rejections of the 20 from the bottom side up set us up for this. That's probably the primary idea for tomorrow. If we do this, I would just be neutral on NVIDIA and look for a new daily setup. Let's go on over to Apple. Failed breakout, failed breakout, failed breakout, failing at the all-time high. Tough. Really, really tough from a really constructive look on Tuesday to just saying no thanks on Wednesday. What does it mean? Like, is this going to be a lower high? Maybe. I would just wait for this one here underneath this 308.50 into this 303.25. That gets a little bit more interesting. Is this the daily higher low? Do we need to break the hourly trend more meaningfully and then test the 20? That's, an opportunity. I would watch for it. Maybe we just flag out here on the daily. TBD. Microsoft, another one, just huge expectation breakers over here, just ugly stuff. Just when you think you're breaking out and ripping on Friday, you get the gap up on Monday. You're like, okay, this is too far, too fast. Let's chill out for a day or two. You gap down, you can't even close the overhead gap. You lose the 200, and today you're lower, failing the 430 breakout point. Again, failed breakout, failed breakout, failed breakout. Just warning shots across the bow over and over and over again. Now, do I want to be short in the hole on Microsoft after it's done this? Probably not. But is it a strong long watch? I don't think so. All right. So my idea here would just be, if you wash out the 20 and can reclaim 430, maybe you get counter trend, but low expectations on Microsoft in there. If we're just in here noodling around, just wouldn't even touch it. Let's go on over to Amazon. We talked about the double top a little bit already. Here it is, right? So underneath this 255 on lower highs, probably worth watching for. The trade for me tomorrow is to look for morning weakness that looks below and fails. The previous day low, there's your hourly inverted head and shoulders, counter trend move over the neckline on a 50 SMA reclaim. So I would like to trade that counter trend from like here to here, risk reward, right? Look below and fail, reclaim and go. That's the idea. And then when we get here, I would absolutely keep an open mind for daily lower high underneath the double top neckline. Right, so I think that's that's fairly straightforward on Nancy. Let's go on over to Google. Google is just aggressively down, really heavy close. Offering is horrible. A lot of stock for sale here. Look at the volume coming through it. That's what you don't want to see, right? You don't want to see high volume selling. That's distribution. That's people unloading, saying, oh, I don't like this, right? So maybe like Amazon, you don't want to be short in the hole here at the dead lows. Maybe it's a 50 SMA kiss and then bounce. I don't want to get overly pessimistic these names, because on a weekly chart, this is just a weekly high or low, right? I do want to respect the short-term indications of the heavy close today, the inside bar, but I also want to kind of zoom back out, sit back in my chair. You can hear me. I'm way back here now. And I just want to kind of say, is that a weekly high or low opportunity? It certainly might be. So I would watch out for that over this 350, over the left side peak, over the 50 SMA. Just be careful getting short in the hole there and too pessimistic at the wrong time. If you're looking to get short, you really need to be short here headed into this week. And then, the gap down made that difficult. So anyhow, that's the take on that one. Here comes Broadcom. Earnings in the after hours has us at about 413. The market maker move here was about $40. So that's actually not a great look. We're extending beyond the market maker move and clearly not holding the top of the flag. Last I looked, it was kind of in here, and certainly 413 is lower than that. So you're going to be opening near the flag lows. That's hey, title of today's video, failed breakout. How about it on AVGO? So I'm going to let opening range volatility settle out on this one tomorrow. We do have some levels underneath us here. If I just go ahead, and this is going to hurt your eyes for a minute. I promise I'll put it back as quickly as I can. But you've got some levels down here that we could turn back up and at least have on for a little bit of help underneath us. This is a gap, so that's going to have to be yellow. Let's just do this real quick. Yellow for the gap and yellow for the gap. Let's do this. So just getting a couple more levels on there for us. That way we've got some reference points to the downside if we break down through the flag low. If you don't do this with your levels, if you're redrawing your levels every single time, you do whatever's right for you, but just a quick little cheat code, by the way. So make the levels the same color as your background. Do we need to really? They don't have pure black? Terrible. Okay. So there's your Broadcom, possibly looking at a flag range low break, bringing you into this gap close and the 376, just some additional downside levels. Let's go on over to Meta. Meta, we talked about the failed breakout already. I won't beat that dead horse. I'm sure the YouTube transcript algorithm's like, oh my God, this guy's saying failed breakout so much. What's going on? Just what do you do with this? The thing to do was to be long yesterday. and then trade it, back up towards the highs today. So shout out, a bunch of people, but specifically Rick did a really great job managing that in the group with some really creative options financing on it. And, it's just hanging out in the range. So we'll see what happens with Meta and whether or not we can continue up and out from this range high. And, the bull look continues off of that Friday hammer. Let's go on over to Tesla and see what's going on with Tessie. Failed breakout. We talked about it already. Again, what do you do from here? A lot of these charts are kind of broken. I hate to say that, but a lot of them are broken and kind of need, another day or two to maybe set up for the next tradable idea. Tesla needed to be a close up here at the highs for a then follow through up into this equal high. That's not what we got. We got a rollover failed breakout. I don't want to be buying this again at the daily 200. These buyers from here are probably going to stop out, right? And you're lower on Tesla. So no dice on that. Really ugly close with that upward wick. JP Morgan, we've looked at briefly already. Nothing to really do there. Just keeping the pulse on financials. This is an improper end of the auction. All those equal lows 296. I would think you need to flush that out and then come up. So we'll see what it does ultimately. MU, another one where I'm like, the chart's fine if you're scalping pennies out of it here and there, but for a new setup to actively go and do something on, I don't think so. Number one, you're still extended 16 ATRs from the 50 and incremental higher highs. People who are just continuing to buy this thing up here, they're just asking for a liquidation break in my view. Again, I don't want to be overly pessimistic. I just don't see the setup on a lot of these names. We're going to need another day. AMD, just a big disappointment today, giving it the professional gap up. Unfortunate after going sideways for a number of days, 4 or 5 days in here. To gap up, really? Like you couldn't give us the open inside for then the Brigade bolt here. It is what it is. I mean, you can't really, you can't do anything about it other than maybe just buy the gap fill reversal. But AMD, either you're long from somewhere in this balance and riding it out, but day trade wise, terrible. What are you going to do with this 5-minute chart? Right? You're trading that junk? For me, no thanks. I mean, maybe you took a trendline break in there and you're higher, but really not much to say about AMD after they already made the move in the after hours. It's going over to Intel, another one that made the move in the after hours. 20 SMA pulling it back in today. Maybe a gap fill reversal watch tomorrow, but not my favorite. Ideally, this would have been gap and go, setting us up for consolidation and a breakout through that 124.50. Today just the daily bar speaks for itself. It didn't do what we needed it to do. All right, I've got 3 trade ideas for you, and then I'm out of here. CLS is the first one, Celestia. Take a look at this inside candle. Up and over the previous day close / high. Let's see if we can't just round that off to 71.50. Fine. Something in here, up and out, could get interesting. Nice move. Good volume to support it. Low volume on the pullback today. A resting bar even. I just call it a resting bar. No ability to close the gap on a down day in the S&P. Even if you do close the gap, you've got left side to sort of risk off of here. So really liking CLS if we can get this up and out on that particular name. IBM is the next one on a gap fill reversal over this high from Friday. So $300 give or take. Let's just round that down to 300. If we could support, so look below and fail and then reclaim today's low tomorrow would be the long idea there on IBM. We know it's got the blessing from the White House. We know that they won a huge quantum award, grant, I should say. So watching IBM, does it come back and play a key role for the market going forward? Possibly. 300 look below and fail is the idea I'm looking for on that one. Then Qualcomm has a really nice looking flag that's building out on the daily. It hasn't gone too far too fast. It's trying to let the 50 play catch up. We did not shake out the low, so 2 possible entries on this. Either the market's weak and this stays weak, you look below and fail here. Relative strength is viable back up through that 225. That's if the market pulls in, if the Qs pull in, or if the market says you're only going to get 1 day of pullback and then we're off to the races. You just want to look for Brigade bolt there on Qualcomm up and over this 254.65 into new local highs. And that's what I've got for you in today's I hope that was slightly quicker than normal midweek market update. Places to be, people to see. Hopefully you guys had a fantastic start to your trading week. We're halfway through. Thursday, Friday, bring us home. We will have the full Monty labor report on Friday. Coffee and donuts up in the office for the pre-market prep. 8 o'clock Eastern time every morning. Remember, tomorrow morning, we are doing the giveaway for the month of June for the live squawk. So come on out to the morning show tomorrow morning, 8 a.m. Eastern time. We'll run the giveaway. We'll announce the winner on Friday. And then, of course, we'll sail off into the sunset for the weekend. So if you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. Again, we're live every morning, giveaway or not, every morning at 8 a.m. Eastern time here on the channel for another episode and installation of the pre-market prep. We will see you there. As always, have a green trading week, and I will see you in the next one.